February was a short month, but it didn't stop over $125 in passive income from appearing inside my $120,000 portfolio. February was also the month a guru made a very bold stock pick. You may have heard of this guru. Last month, he said, "Don't yawn, Wall Street is mistakenly concerned about SVB Bank." He said the stock was cheap because it fell 60% in 2022. Well, Jimmy, you can now get a 100% discount as SVB was totally wiped out of its entire $17 billion market cap in less than 48 hours. Now that's a really bad quote by Jim Cramer, but remember this quote from me. It may take years for a company to rise, but mere hours for a company to collapse. The more and more experience I get with the stock market, the more I think the vast majority of people, they should not be individual stock pickers, but they should just own ETFs. ETFs will pull together a bunch of different stocks, so risks are much more diversified. $1 trillion were put into ETFs in 2021, as more and more people are realizing it's a winning strategy. The shareholders of SVB lost their entire investment. I cannot imagine losing that much money right now, let alone when I'm in retirement. Luckily, there's many great ETFs out there to invest in, like SCHD or JEPI, and these also pay dividends when the underlying companies reward shareholders. Now let's take a look at what popular dividend companies raised their dividend this past month. Quest Diagnostics with an 8% raise, the 13th straight year that they've raised their dividend. Quest is actually holding some of my urine when I did a drug test at one of their labs last year. I wonder what they do with those samples. Clearly it's something magical if they're raising their dividends with it. Public Storage with a 50% hike, the first time PSA has raised their dividend since 2016. They currently have a starting dividend yield of over 4%. Waste Management, one of my dividend companies, raised their dividend 8%. That's the 20th straight year of dividend raises. So we have one company just storing your junk for a fee, and then we have another company removing your junk for a fee. If this doesn't perfectly summarize consumerism, I don't know what would. 3M is still hiking dividends, just barely, less than 1%, but they continue to keep their dividend king streak alive. They gotta save money for all those lawsuits. If you like Taco Bell, cause who doesn't, their parent company Yum Brands just raised their dividend 6%. At one point, Taco Bell was owned by PepsiCo, which gave us a 10% pay raise this past month. Pepsi became a dividend king. That's 50 straight years of increased dividend payments in 2022. Realty Income doing what Realty Income does, raising that dividend ever so slightly multiple times a year. Equinix, one of the more low-key REITs that I hold, NextEra Energy, Home Depot, Domino's Pizza, they all announced 10% dividend raises within days of each other. Raising that dividend by exactly 10% was really popular in February. It must have had a really good ring to it. We gotta talk about the reason why you actually clicked on this video, to see all the dividend payments I received in the month of February 2023. So to start off the month, I got paid $20.10 from the fan favorite ETF that is JEPI. This is one of the best ETFs out there as it blends in covered calls, ELNs, as well as just some plain old buying and holding great dividend companies. So $20.10 from JEPI. Then moving on here, we have Lowe's paying me $9.17. Here's a pro life hack. If you own a washing machine, buy one of those pans that can go underneath it to prevent any water damage from any leaks. Talking from personal experience here. So after my $9.17 payment from Lowe's, I also got paid $5.70 from MasterCard. MasterCard is processing billions of dollars of transactions each day, and MasterCard will make a small sliver from each of those transactions. After MasterCard, we have Procter & Gamble paying me $6.73. So many household items are actually Procter & Gamble products like Tide, Charmin, Bounty, NyQuil, Febreze, Old Spice, and so many others. After Procter & Gamble, we have Oh, Realty Income, not Reality, and they paid me $10.70. So this has actually been a company I've been buying a lot of. Almost every week I've been putting an extra $100 into buying more shares of O, and that's because I really believe in this real estate company. They own over 11,000 different commercial properties across the United States and some international exposure as well. And they're just collecting those monthly rent checks. They have an amazing 99% occupancy rate. So I know the chances of O continuing to pay out those monthly dividends is really high, and that's why I'm continuing to buy more of O, making it one of the core positions in my portfolio. So $10.70 from O, and that went into buying more shares of O Realty Income. After O, we had AbbVie paying me $21.79. AbbVie is another dividend king, 50 plus straight years of dividend raises, uninterrupted, no dividend cuts. AbbVie is another company you can still get at a ridiculously high yield, so I'm really enjoying my shares of this pharmaceutical company. After AbbVie, we have the largest company in the world, and Apple paid me $9.57. Apple products are used all around the world. It's either Apple or Android in most developed countries. So $9.57 from the largest company in the world that I have ownership in. Then we have Costco, which paid me $2.70. I just dropped like $250 at Costco yesterday buying groceries as a single person. If you have a family and you shop at Costco, I'm sure you're dropping close to that $1,000 range every time you go. Costco paying me $2.70. We got Starbucks paying me $15.07. How about that nice rebound Starbucks has had in the last year? I remember when the stock was down in the low 80s, high 70s, and people were really down on the stock. And that's when I really started buying more into my Starbucks position. And it's really rewarded me well. Now it's solidly in the low hundreds, so really glad with this investment. After Starbucks, we have some income from my Fidelity money market accounts, but we'll talk a little bit more about that coming up. That's not going toward my dividend totals, but one ETF that is X-Yield, and they paid me $4.42. X-Yield is another Global X product doing covered calls on the S&P 500, so $4.42 from them. And then its brother is Q-Yield, another Global X product that does covered calls on the NASDAQ 100, and they paid me $17.57. So a lot of people complain that QYLD never goes up in share price. Well, it's actually in the green so far in 2023, so take that to all the QYLD haters. And then to cap off the month, we had $2.06 from Divo. This is another income ETF that I'm slowly building a position in my Roth IRA. Altogether, I had 12 companies / ETFs pay me for a grand total of $125.58. That's a near 12% increase from February of 2022 when I made just $112. A near 12% pay raise for doing very little work other than just buying great companies. I was able to increase my 3-month total to just under $600. That's how much I make every single quarter, and that means my monthly average in dividends is also around that $200 mark. That's $200 extra that I can spend on whatever I want. Like, that's $200 extra that I could store in SVB Bank. Okay, guess I can't do that anymore. But I can sleep very well at night, guys. And why can I do this? It's because I know even if my largest position went broke tomorrow, I'd still be well covered because I own so many great companies and ETFs. They allow me to be diversified and spread out that risk. I've also started to keep track of my interest earned on uninvested cash. This is money that's often held in Fidelity's money market accounts. And I have back-to-back months of $43 to start off the year. Keep in mind that February actually had slightly less days than January. Now, I expect the Fed to continue to raise interest rates again as inflation is nowhere near under control. So that means higher interest rates, and that means even more in passive income that I can earn. So one day I will be in retirement, I will be living off my dividends, and companies collapsing, because we know SVB was far from the first and they will be far from the last. That won't interfere with me having margaritas on the beach. Now, I'm still probably making more money going to the bathroom at work, but each day I'm getting a little bit closer to having my dreams become a reality. I'd love to hear what companies paid you the most in dividends below. Want to see my full $120,000 plus portfolio that I was able to reach in my mid-20s? Check out the Patreon link below. Be sure to join our Dividend Discord community as well. It's a great way to talk with other like-minded investors. Support a small-time YouTuber by hitting that like button, telling me how your dividend journey is going in the comments below. As always, my videos are found in podcast form under the Collect Cash podcast name. And say it with me: buy, stash, and collect cash.